Thank you for joining us. This is Business Incorporated on Channels Television. I'm Chimezie Obi Iwago. On the show today, Nigerian bankers boost support for the country's displaced. Tanzania issues new rules to tighten foreign currency exchange controls. Plus, Zimbabwe labor group threatens protests over ban on foreign currencies. First, the markets. Well, we're beginning with intraday numbers from the Nigerian stock market, where the main index was trading around the flat line. In South Africa, the JSE index was up 0.28%, while the EGX 30 in Egypt was 0.63% in the green, also at intraday. The Kenyan market closed in the green on Tuesday. In the Middle East, Saudi Arabia's stock market seems to be extending gains from yesterday's session, lifted by advanced petrochemical, while political concerns continued to weigh on most other Gulf markets. The index was up 0.4% after snapping a four-day losing streak in the last session. But other Gulf markets mostly fell on mounting political concerns. The Abu Dhabi index was down 0.67%, with Emirates Telecommunications Group shedding 0.5%, and First Abu Dhabi Bank slipping 0.3%. Dubai's index also edged down 0.03%. Qatar's index traded 0.33% lower at about midday Nigerian time. And European stocks rebounded from early losses in the morning after U.S. Treasury Secretary Steven Mnuchin said the U.S. and China were closing in on a trade deal. U.S. Federal Reserve Chairman Jerome Powell also on Tuesday reiterated the central bank's independence and issued a warning about policy caving to short-term political interests amid pressure from President Trump to cut rates. Well, let's join Ashutosh at the Frankfurt Stock Exchange. Good afternoon, Ashutosh.
Hi, Chimi. Thanks for having me.
Right. U.S. Federal Reserve Chairman Jerome Powell said the risks to global economic growth have risen, raising hopes of a possible cut in interest rates next month. How is the latest commentary being processed by the markets in Europe?
Well, the response is subdued. I mean, and the markets opened really in the red this morning all across Europe because the market was already almost pricing in a hefty cut, that is a 50 basis points cut in interest rates. But that is not what they're going to get, at least after the commentary that was clear. The St. Louis Fed's James Bullard said that expecting a 50 basis point cut is being a little too optimistic, and insurance of 25 basis points was good enough. So while the markets are still anticipating a 25 basis points cut in the interest rates, for now the hefty cut is not coming through.
Our shares in French investment bank Natixis are taking a beating as investors continue to pull their money out of its unit H2O asset management. What more can you tell us?
Well, Jimmy, more than $6 billion have been wiped out of HTO in just a matter of a week. And our investors are concerned about its exposure to a controversial German businessman. His name is Lars Windhorst. And now investors are also worried after the fact that Morningstar, a well-known research firm, that actually suspended its bronze status on the bronze rating on some of one of its fund, and that was a cause of concern for investors. Now remember that the H2O has been a star performer for Natixis, and that's the reason why the Natixis shares have taken such a beating. The H2O has actually seen the assets under management grow to $30 billion within no time, and that's the reason why it's such a star performer for them. And it's at a time when the industry wasn't exactly doing that well.
Ashutosh, if I may ask, who is this controversial German businessman, Lars Windhorst?
Well, Jimmy, Lars Windhorst has been a flamboyant businessman with a very kind of a troubled legal history. I mean, he faces many legal suits, but he has a very interesting life altogether, because when he was in school, he started a company. He was dubbed as a Wunderkind, which means a wonder boy, by none other than German Chancellor Helmut Kohl. But then from that point on, it's been a fall from grace of sorts for him, because two of his companies collapsed. He filed for personal bankruptcy. He even was handed a suspended jail term for breach of trust. And so he tried to actually rebuild his fortunes with this holding company called Sapinda. Now it's called Tenor Holdings. But his legal troubles haven't actually eluded him.
All right, thank you for those updates. Ashish, enjoy the rest of the day, and see you tomorrow. And stocks in Asia were subdued during midweek trading after U.S. Federal Reserve Chairman Jerome Powell tempered expectations for a potential interest rate cut. The Nikkei 225 in Japan declined 0.51% to close at 21,086.59. The Topix index fell 0.59% to finish its trading day at 1,534.34. In South Korea, the Kospi closed just above the flat line at 2,121.85, while Australia's ASX 200 slipped 0.26% to end its trading day down under at 6,640.50. Mainland Chinese shares struggled for gains on the day. The Shanghai Composite was down 0.19% to 2,976 points, while the Shenzhen Composite was largely flat at 1,560.51. In Hong Kong, the Hang Seng Index was slightly higher as of its final hour of trading. And in the U.S., stock index futures jumped higher this morning after Treasury Secretary Stephen Mnuchin told CNBC that the U.S. and China were almost there on a trade deal. At around 5:25 a.m. Eastern Time, Dow futures rose 106 points, indicating a positive open of more than 112 points. Futures on the S&P and Nasdaq were both seen slightly higher. Meanwhile, Wall Street saw its worst day of June on Tuesday on the back of comments from Federal Reserve officials. Fed Chair Jerome Powell said the central bank is assessing whether the U.S. economy is calling for lower rates. However, Powell also said that the Fed will take a wait-and-see approach given how rapid recent economic changes have been. Meanwhile, investors are also looking ahead to a G20 meeting later this week, where President Donald Trump is due to meet his Chinese counterpart Xi Jinping. In terms of data, there will be durable goods numbers at advanced economic indicators due at 8:30 a.m. Eastern Time. In corporate news, General Mills and KB Home are due to report earnings. Well, away from the markets and back here, Nigeria's leading bank executives who make up the Nigeria Humanitarian Fund Private Sector Initiative recently came together to show solidarity to displaced communities affected by the ongoing crisis in Borno State. Now, the executives recently toured camps for internally displaced people in Maiduguri to assess the situation there. 14 of Nigeria's leading companies formed the initiative in November 2018 to pool resources together and support the country's displaced.
Humanitarian crisis in northeast Nigeria, now entering its 10th year, is one of the most severe in the world. The ongoing crisis, triggered by regionalized armed conflict, has led to widespread forced displacement. 1.8 million Nigerians, predominantly women and children, are internally displaced, and 6.2 million people are in need of urgent assistance.
We are happy to receive the delegation and we welcome them. They should help us with food. They should also help us with shelter and water. These are the problems we're facing. We need schools for our children. This is the help we want from them, as it is weighing us down.
As part of the Nigerian Humanitarian Fund Private Sector Initiative, companies and banks reiterated their commitment to this platform, emphasizing the need for Nigerians to take ownership of the crisis.
I'm looking at the children and I see the problems of the future, because if they don't get what they really need in terms of education, healthcare support, and a stable family life, then we're going to have other problems to deal with in future. And it just shows why it's a national problem.
Mrs. Awashika led a delegation that included Biyo Lagbami, Executive Director of EcoBank, Cherubuka, co-chair of the Nigerian Humanitarian Fund Private Sector Initiative Steering Group, and Olumide Akpata, senior partner of Templars Law Firm, many of whom visited camps for internally displaced people in Borno State for the very first time. The NHF PSI is a groundbreaking global initiative created in Nigeria and managed by the United Nations Office for the Coordination of Humanitarian Affairs on behalf of the UN Humanitarian Coordinator. The initiative is expected to see Nigerian companies join donor countries in pooling donations and resources together. The platform will help collaboration to identify innovative solutions and generate resources for a more effective response.
Out of these three, this is the type of partnership I'm looking forward to. I bring the United Nations, I bring the private sector to interface with the government and NEDC when they get operational here, so that we can all come together, pool our various synergies and strengths, so that we can address.
To date, the Nigerian Humanitarian Fund has raised $90 million in contributions and pledges with support from 17 donor countries. Business leaders involved in the initiative aspire to raise $80 million towards the humanitarian response. The UN agency says the unique collaboration introduces an unprecedented opportunity for Nigerian businesses to lead the way in bringing Nigerians together for Nigeria.
And in Kenya, the government has signed agreements with oil major Total, Tullow Oil and Africa Oil Corporation to develop a 60,000 to 80,000 barrels per day crude processing facility for oil discovered in the country's northwest. The term agreements were for discoveries in blocks 10BB and 13T in South Lockshare Basin, and the partners were now focusing on securing financing for an export crude oil pipeline. Tullow and Africa Oil first discovered crude oil in the Lockshare Basin in 2012, which Tullow Oil estimates contains an estimated 560 million barrels in proven and probable reserves. Tullow has said this will translate to 60,000 to 100,000 barrels per day of gross production. In addition to the processing facility, a crude oil export pipeline from Lockshare to Lamu on Kenya's coast was also part of the deal. And Tanzania has tightened its currency controls with new regulations on foreign exchange bureaus in what authorities say is an ongoing fight against money laundering and currency speculation. The new rules, published by the central bank, come months after the government revoked the licenses of around 100 bureaus and temporarily shut a newspaper for using unofficial data on exchange rates. The new regulations will make it more difficult for exchange bureaus to operate, likely resulting in more transactions shifting to commercial banks. They raised the minimum capital for forex bureaus by threefold to 1 billion Tanzanian shillings and require bureaus to maintain working capital of at least 75% of the paid-up capital. The new rules also require shareholders, directors, and heads of branches of exchange bureaus to pass a fit and proper person test from the central bank before being approved to assume their positions. Zimbabwe's largest labor body has threatened protests over the government's decision to ban the use of foreign currencies and make the interim currency the sole legal tender. President Emerson Mnangagwa maintains the move to abandon a multi-currency system was an important step towards removing economic imbalances. Mnangagwa, who replaced longtime leader Robert Mugabe after an army coup in November 2017, is trying to attract investment and lift growth after a litany of failed economic interventions under his predecessor. His government said on Monday the country's interim RTG's dollar would be the only legal tender, ending a decade during which multiple currencies, including the US dollar, had been accepted in shops. And when we come back after the break, we'll get the global perspective on the Central Bank of Nigeria's 5-year policy thrust. So stay with us.